Hi, this is Joseph. It is Wednesday, February 25th, 2015. We're still trading during the New York session, but I wanted to take the time to make this quick video just to share with you what it is that I'm looking for over the next couple of trading sessions and the last trade that I executed with the trade copier. So before I go any further, I wanted to talk about the pound dollar. Last night during the update, during the Asian session leading into Wednesday, we were talking about the possibility of trading at HL30. So I'm more or less bringing price back to where it was when I'm approximately about the time I made the video. And if you're familiar with my trading strategy, there are a couple of different ways that I execute trades on a day-to-day basis for day trading. I'm using either an HL30 technique, which allows me to trade off of the previous day's high and low. Obviously, price remaining inside of consolidation, allowing me that opportunity. And then I also trade breakouts. Breakouts would be the continuation breakout trade. And each one of those particular strategies gives me a particular target. The HL30, I earn approximately 20 pips when I trade those reversals. The continuation breakout trade, I earn approximately 50 to 55, depending on where my actual entry is. And when I was setting up the possibility of what I would be doing during the Asian and London session, we were talking about price at resistance here on the pound dollar and also on the euro dollar. And there were a couple of HL30 patterns or signals here, and specifically on the euro dollar as well on the 30-minute time frame. The HL30 again giving me the opportunity to sell off of resistance. But with my analysis on the larger time frames, taking a look at economic data, the expectations, market sentiment, it was my expectation that price was going to remain towards the upper ranges of resistance and possibly break through those levels. So I had mentioned in my update during the Asian session that I was not really interested in selling just yet. I still felt that there was too much pressure to the upside. And that's exactly what happened. We finally got our breakout. Now, it was just a matter of waiting for it. I didn't know if I was going to get the breakout and the actual signal during the London or New York session, but it was just a matter of waiting for it. So just prior to the market open for the London trading session, price finally broke up to the upside, and here is where I got my continuation breakout trade. There were a couple of different reasons why I changed the overall target on this one. This one earned us approximately 35 pips. And the reason we didn't earn 55 pips, and I'll take you to that chart right now, was that I was looking at price here approaching that candle right there. That candle right there was actually the signal. When price reaches the overall resistance within 1 pip, and prints that continuation signal candle, it does qualify. It doesn't actually have to go above it. As long as it's at that number, at that resistance point on the number, or 1 pip below, it is acceptable. But what I did was I waited just to make sure I had extra confirmation, and that was as a result of waiting for price to, let me see if I can stop right there on that candle. I apologize for it jumping around like that. That was where I got in with this strong candle. That was when I finally felt comfortable enough to trade this higher. Now, I know that during the Asian session and late New York session on Tuesday, especially even leading through the London session, there were many different blogs and forums. They're highly reputable sites that analyze, and do a lot of market commentary. They kept saying that they just didn't think that the pound dollar was going to go much higher than this resistance point, and they kept resisting the idea. But as I said in last night's update during the Asian session, that in my personal opinion was that the pound dollar is doing much better, and the expectation there is that price would go higher. Outside of a few economic reports where price could pull down, to me it was still in an overall uptrend, and we were going to see too much pressure. So again, I did not sell it at resistance, which is a pretty common tactic, to sell it if it was going to remain inside of consolidation. But again, the larger time frames showed that price was going to move much higher. Now, my actual entry was at my exit was at 1.5535. That's where I actually closed that position, and price went as high as 38 and really didn't go any higher. Now, whether or not it actually takes out that high, it might over the next two trading sessions. So I'm looking for that possibility. But I want to take you to the larger time frames here on the pound dollar. So in the pound dollar, this is the 4-hour time frame. The 4-hour time frame. This is my technical analysis here on the pound dollar. Actually, I'm going to need to adjust this trend line because it's not drawn correctly at this point. Now that we have this new high, I can now draw this trend line to match this price swing low here. That's the correct way to draw that, but I'll do that in just a moment. But what I want to draw to your attention is the expectation and these larger price targets. They are price targets, meaning that I'm not calling a trade right now at this moment. I'm going to day trade, meaning that I'm going to get in and get out and take pieces of it on a daily basis. The breakout trades, the HL30s, things like that, much safer. I'm going to make money generally every day instead of just buying right now and holding and waiting to see how long it actually reaches these price targets. I'll take you to the daily chart in just a moment because I've been calling for the possibility of price reaching 1.5700 on the pound dollar for a couple of weeks now. Obviously, we're going to see times of pullback, retracements and pullbacks where it tests support levels and consolidation, but it doesn't mean that the overall trend to the upside is over just yet. There would have to be quite a bit of work where price starts to close down below some of these key support levels on the larger time frames to convince me that price isn't going to go any higher. If it comes back and just retests some of those support levels, those key support levels, then it's exactly that. It's just a retest and a bounce before it resumes its move to the upside. So we had this low here. This was February 3rd. All right, that was a low here on the 4-hour time frame, and then I've got this clean move to the upside, this A low, a B high, and this C retracement here at the 382. So I'll go ahead and open this up for you so we can see exactly what's going on in here. Here's the 382 retracement level right in here. I'll go ahead and put the crosshairs. I know there's a lot of technical lines drawn through here. I don't want to confuse you, but this is the range in question that I'm talking about. This was the move to the upside, this A low, B high, C retracement here to the 382. Now, based on the depth of this retracement, I have projected price targets. The first one here at 1.5550, and then the next one at 1.5570. Now, again, I'm taking pieces of this overall move to the upside, waiting, for example, like we did this morning with the continuation breakout trade and trading it and just taking pieces of that move, closing the position, and then waiting for another trading opportunity. And remember where we're actually trading to, these price levels. So this was the depth of this retracement. Again, based on the depth of this retracement, Fibonacci retracement, I used a Fibonacci tool to determine these extension targets, and they repeat over and over again. Here's the daily chart. So I'm tightening it up here, the candles here, so that you can see all the data here on the daily chart for the pound dollar. But again, this is that price swing low. Now I'll go ahead and open it up, and here's my price target based on the retracement here. This one's a little bit different. Obviously, we're looking at a different time frame. This is the daily chart, and we've got this A low, a B high up here. With that B high, it is approximately 1.5352, and then this retracement again here is that 382. Now again, based on the depth of this retracement, this is my Fibonacci extension target, 1.5700. I still expect that it's very, very possible, but again, I'm not recommending for anybody to buy right now and then hold all the way through there unless you're going to swing trade this, unless you have the ability to use a larger stop loss and you're willing to hold for a couple of weeks, maybe even a couple of months. We never really know how long it's going to take. At this point, again, we're just going to day trade it. I do also, at the same time, on the larger time frames, I'm looking for these continuation breakout trades to help me identify the overall trend direction at the same time. And I do have some students that will use this strategy, that continuation breakout trade, the same one that I used this morning on the pound dollar on the 1-hour time frame. They use it on the daily chart. They have a very limited amount of time to trade, so they're just executing trades, but they accept and they understand that they're going to be using bigger stop loss levels because the price swings and the pullbacks, the movement on a daily basis is much bigger than maybe the retracements on a 1-hour time frame. So again, we're still expecting that it's a very strong possibility price will reach that 1.5700. But again, we're just going to take pieces of it overall on the daily time frame. The euro dollar is more or less moving sideways. Remember, we talked about this last night. They are two different economies. Obviously, whatever happens in the eurozone can have a temporary impact on the pound dollar and the UK economy. But they are two different economies. It's very often that we can trade both of those currencies, the pound dollar and the euro dollar, in opposite directions depending on the economic data that's available. A lot of times they'll work and they'll move in the same direction, but you have to prepare yourself for the fact that they can and will split and move in separate directions based on their own economic circumstances. This is the euro dollar daily chart. Now, the breakdown here on the euro dollar, I mentioned on the euro dollar, this is the 1-hour time frame, that I would be looking for that same continuation breakout trade right here, which developed about an hour or two after I got into the pound dollar trade. That will sometimes happen. Sometimes I get a continuation breakout trade on the pound dollar, and then I get one on the euro dollar, and they don't set up at the exact same time, the same hour. I have to wait a little while. And it just depends on the market conditions, the market environment. But this one gave me a continuation breakout trade, and all of the indicators confirmed here, but I didn't get the 3 pip entry. So if you're wondering why I didn't execute on the euro dollar, first of all, it completely reversed. I mean, it totally collapsed, but it didn't give me the entry. So when I trade the continuation breakout trade, I wait for the signal to break out of a range of consolidation. And then I look at the indicators. I've got 3 indicators here, primarily the Bollinger Bands, then the CCI. And then, even with that information, if those 3 indicators confirm, I still have to wait for a 3 pip entry. So if the high of the signal candle, this is just the signal candle, if the high of the signal candle is 1.1388, I can't get in until 91. 1.1391. That was my actual entry, a 3 pip entry, which means price needs to take out the high of the signal candle by 3 pips. And it never happened. And that 3 pip entry rule, I actually developed this strategy. This was one of the first strategies that I developed in 2001. I initially started off with a 10 pip entry, which was what I found was over time testing it month after month and week after week, I found that I was giving up too much of my profits, and I was able to focus in on just the 3 pip entry. And you'll find that if you use this strategy over and over again, it's such a precise strategy that 3 pip entry rule will keep you out of trouble if it ends up being a head fake. That's one of the final steps in preventing the possibility of getting into a head fake. I was looking for ways to prevent head fakes. I didn't want to get in. When I first developed this method, I would get in as soon as the 1 hour candle would close above the resistance point of consolidation or support, depending on which direction you're trading it in. But in this instance, it was to the upside. So I would get in immediately when I had the closed candle. And then I found that trades were failing. They just would roll right back over and go right back inside of the previous range of consolidation. So the way to prevent that was to wait for that 3 pip entry. Again, initially I started off with 10 pips, but I was giving up too much of my profit. And I also have to have my expectations in line. How far can I expect price to go based on today's trading activity, the economic data, and all of the information, market sentiment? How far could I expect it to go? Because even if I found myself in a winning trade, I found myself in the beginning of my trading career holding onto a trade too long and then giving back all of my profits. So you need to know where to take profits and take money. You need to bank money, take the money off the table, put it into your bank account, and wait for the next trade signal. So that was one of my ways of preventing from getting it, first of all, into a head fake. But that 55 pip target also provides me with an opportunity to trade within the average daily trading ranges. So I'm not expecting too much and I'm taking profits. If you hold on too long, you could potentially give back profits if you don't have an exact or a precise exit. So again, I never got a 3 pip entry. It rolled over. It turned out to be somewhat a head fake at this moment, and price is still more or less inside of the previous range of consolidation. Whether it comes back down any lower, I don't know until it takes out that price swing low here on the 1 hour time frame. That low is 1.1335. If price takes out that low, then I would expect it to drive back down towards support again. But at this moment, I'm not into the euro dollar trade, and I did not take it and go long. So hopefully that'll answer your question. If you were watching last night's video, my analysis, and I was talking about the possibility of looking for this breakout, that's why I didn't trade it. It didn't give me the 3 pip entry. And test that strategy, that 3 pip entry. If you're going to be a hands-on trader and you want to use this strategy, first of all, it really depends on your ability to identify the correct and the appropriate ranges of consolidation. You want to make sure that they're not too tight, that range of consolidation. And when you do get the signal, wait for that 3 pip entry. It will keep you out of trouble if it turns out to be a head fake. You will not get involved in the head fake, and you will not have a losing trade if you do it correctly. So that kept us out of trouble here. Now, setting up for the next few trading sessions, let's go ahead and take a look at I more or less need to wait for the rollover period. This is that dotted line right here, which is 5 p.m. New York time. And then I'll look for the opportunity or the possibility of trading an HL30. This is the euro dollar 30-minute time frame. I may stay away from it just because the consolidation continues. We saw the breakout and it went back inside of consolidation. I don't know what's going to happen here. I might need a little more time with this one. This is the pound dollar. I might consider trading an HL30 off of resistance after the rollover. It really depends on what it looks like when it sets up. But again, we're still looking for the possibility of price reaching the 1.5700. It might not go any higher for the rest of the week here on the pound dollar. It still might reach that 1.5700, but it might not go any higher than today's high. That's something I need to assess and to analyze when we get that rollover. The dollar yen, I had mentioned that I was going to be staying away from the dollar yen because to me it seems pretty choppy. It's moving beyond the 10 pip range. This was the low point of that 10 pip range from the previous day's low for the HL30 because I had considered trading an HL30 here after the rollover on the dollar yen yesterday. But you'll notice this was yesterday's low and this was the lowest point for it to reach that 10 pip range to qualify for an HL30, which was 118.65, and it actually went lower than that. So in my mind, if it goes too far, it's really not going to set up for a perfect HL30, and I can't trade it with that 20 pip target, 20 pip stop. If it's moving too much, it's possible that if I do get a signal and I put a 20 pip stop on it, the 20 pip stop will be too small and too tight for this type of activity. It's moving too much is what I'm getting at. So again, sometimes it works, sometimes it doesn't. But if it doesn't line up correctly, I'm not going to take the trade at all because there's always another opportunity on another currency pair to focus in where it's going to line up correctly and I won't be making any mistakes. There's no hesitation. I don't want to get into a trade where I think there's a possibility that it might fail, but I'm going to test it to see if it happens. That to me is a gambling mentality. I want to be right 100% of the time. I know I'm going to experience some losses, but it's the one way that I can control my behavior so that I can make sure that I execute correctly for you and for me, and that way we can try to maximize as many winning trades as possible without experiencing any losing trades or very few losing trades. Is just to wait for the trades to set up perfectly according to the rules, even though it's tempting, even though I know price might bounce back up. If it doesn't line up correctly, I'll just leave it alone, stop looking at this currency pair, and then look at another one that's lining up correctly. For example, the pound dollar. The pound dollar provided a perfect opportunity to make some good money this morning on that one, and then just leave it alone. Now, one of the primary reasons why markets are moving more or less sideways, we're seeing some markets that are trending, but for the most part, we're seeing quite a bit of consolidation in many areas. It is due to what's going on in the Eurozone, what's going on, here in the United States, certain markets, activities, Ukraine. There's a lot of things going on right now, and we do get that. The catalyst. We get the confirmation. We get that move when it finally breaks out, and it's okay for us to trade those trends. We will get the opportunity to trade those breakout moves on the pound yen and the euro yen and the euro dollar and the pound dollar. They all, it always comes back. So it's just a matter of waiting for it. The next update I'll probably do. Maybe after the Asian session, if something actually starts to line up and I want to bring to your attention. We're still trading during the New York session, and thanks for watching this video. If you've got any questions about what you see here, go ahead and send me an email. I'd be more than happy to answer and break down any of the analysis that I have.